Hey traders, it's Chris here. Welcome back for another book review. We said we're going to do one every single month. We got a lot of positive feedback on the other trading book review that we did called 90% Mental. So I wanted to do a book review this month on one that I read in early August that actually had really good time for me. So it's called The Second Leg Down. It's by Hari Krishnan. He was a former portfolio manager at Morgan Stanley and is currently a hedge fund manager at Doherty Advisors. He's got a PhD in math and he did a really good job on this book. So this book, Second Leg Down, which you can see the screenshot here. I have it in Kindle. I don't have it in the physical version, so I apologize and I don't have a book to hold up here and show you, but this is the Kindle version of it. So I read this book in early August, and the reason why I was doing that was because I was actually sensing that there was probably a turning point, a reversal happening in the markets. You know, a lot of the markets are very overextended at that point. So I was looking for potential strategies on how to work with this, hedge with this, find protection, take advantage of this here. And so this book is one of many books that I picked up on the subject, and he just does a really good job in this. You know, Hari has a PhD in math, so he's this macro, systematic, big data, you know, super technical guy, but he really kind of flows really well between, you know, speaking in plain language and then switching to a highly technical nature. So I really just enjoyed his writing style. But for you traders out there, why would you want to get this book? So let's talk about some of the things I really liked about the book that would really benefit you as a trader, how it can help you, some of the strategies I learned from it, and just really broadening my perspective on how to find protection via options, sentiment, look for leverage, look for hotspots, how to find trading opportunities during these key turning points when the market starts to sell off, you know, kind of the second leg down, basically after we've had a little bit of a pullback and now we're starting another leg down. So let's jump into this. Okay, so one of the things I really like about this is Hari does a really good job of telling you or helping you find hotspots in the market. This is markets that are over leveraged, overextended, you know, and you can use option pricing, you can use sentiment, and you can kind of find out how deeply positioned people are in certain stocks and single leg stocks and ETF. You know, are they short volatility at this point? You know, so using these kind of, you know, methodologies to find these potential trades and hotspots that can either warn you to potential turning points or help you find trade opportunities before things start to get expensive or before things start to sell off. One of the big tips on this is that during, you know, bull markets, which many people already know, but that when people are really overconfident, downside protection is usually very cheap, but yet that's one of the best times to be buying it because you could buy some downside protection via options, maybe buying puts for really cheap. You could buy protection by getting long the VIX and things like that. You could do that when it's really cheap. You don't necessarily have to hit your strike price for the market selling off on your put. Just the repricing of options after a big sell-off could get you to hit your profit target really fast. And that's, you know, he's talking about the pricing of options and how that works. You know, if you think about it this way, you know, before the California fires that happened here, I live in California. It's been a very serious event for us. If you were to buy fire insurance in winter, it's going to be very cheap because the threat of fire is very low. But then once the fires are in play, that fire insurance becomes expensive or impossible to get. And so it's that mispricing or changing of pricing that you can take advantage of that to find trade opportunities in the market, which I really liked how he, you know, gave many different scenarios that you should be looking for, different strategies on how to play this. So basically he's giving strategies for hedging. He's giving strategies for when the market, you know, starts to turn very fast into the downside. For example, NASDAQ recently in the last several weeks sold off massively. Tesla sold off massively. Tech sold off massively. So you're seeing this big sell-off. And I know a lot of traders who are really mostly only long-only traders. And if the market's bullish, they're doing fine. But as soon as the market's selling off, they look like a deer on headlights. They have no idea how to deal with it. They have no idea to see these kind of signs ahead of time in the options market, in the pricing, in the leverage, in the sentiment. And this book really does a good job to, you know, give you methods so that you can protect yourself from these situations so that you're not just, hey, market's going up, I'm great. Oh, market's going down, oh, I'm going to lose money. Like you actually have defensive strategies to protect and hedge against this. Some of the other things he talks about, you know, he talks about the timing of options, particularly, you know, do you want to use short-term, medium-term, or long-term? And he makes a really good case on how you really only want short-term or long-term options, that medium-term options have really the worst of both worlds. And he goes into this long explanation, which I really highly recommend paying attention to when he gets into that, because the way he explains it and the things he covers, it really shifted my perspective that I only want to be doing short-term options or when I'm doing long-dated options. Now, a part of the crux of the strategy is that when the market starts to sell off really fast, you want to be long volatility in that initial point because that's where the repricing or this mispricing of options to go from cheap to really expensive happens really, really fast. So in those times of the market, you want to be long volatility. But then after the market has deteriorated for quite a while, and then there's, maybe kind of this settling or basing out in the market, then you want to start getting long gamma. And he really goes through a lot of quantitative data, a lot of strategies, a lot of back testing to show you why you want to be positioning yourself like this. And he shares some really interesting option strategies that were known, but not really things that I would be using that much. And so after kind of going through this book, I feel like I have a whole new arsenal of more intermediate to advanced level option strategies, particularly for these types of markets. One of the things that his big kind of main point is that when you have, the stock markets as a whole have a long only bias. So, they generally are more going up than they are down. The problem is that creates inherent leverage, an inherent bias on the upside, and people are much more levered into that long side. So when the market starts to sell off, just a little bit of dip in the market can force people to unwind their positions very fast. The bigger the gear, the faster that turns. So when it goes to the downside, if you're highly levered, unlike Tesla or any kind of tech stock, just a 5% or 10% drop in the markets could force you to sell your assets, sell your trades, sell your profitable trades really, really fast to cover some of those losses. And I'm sure many of you experienced that when the coronavirus started to happen, and also this recent drop in the last several weeks. And so because of that, that creates a liquidity issue, and that kind of exacerbates the sell-off. He's basically saying in a very technical term that, a very well-known saying that the markets take the stairs up and they take the elevator down. We've been saying this for over a decade, that sell-offs in the market as a whole are generally more violent than buy-ups. Part of that is psychology, part of that has to do with the emotions, part of it has to do with liquidity as a whole. You're much more likely to act very fast if you're really afraid about losing profits or trades that you're in are going to turn negative than if you're kind of in a complacent market that's just slowly, climbing up and up and up. You're much more likely to act fast in a sell-off than you will in a buy-up. And so because of all those reasons, markets sell off faster than they buy up. And if they do that, that alone should gear or direct the strategies that you're using based on the volatility, based on liquidity, based on the leverage, based on the sentiment, and how things can be positioned. So who is this book for? First of all, if you are an options trader, if you are an intermediate to advanced level options trader, I highly recommend it. If you're an absolute beginner, I would say get the book, but wait until you build up some knowledge, because you're going to need to know a little bit about options pricing, some of the dynamics of volatility, skew over time. You're going to need to know your Greeks really well, and you need to understand, the convexity of how options can play themselves out. So if you're a beginner trader, buy the book, but then hold off until your knowledge gets good. If you're an intermediate or advanced options trader, you should definitely get it. Another type of trader that should be getting this is that if you are mostly a long only type trader, so your portfolio is mostly positioned to the long side, and this last sell-off that's happened over the last few weeks, if it's really caught you off guard and you've really been struggling, your portfolio is down massively just because of a few weeks of selling off, you definitely want to buy this book and learn the strategies, because they will give you ways to discover turning points ahead of time, protect yourself against that, and also profit from these types of sell-offs. Some of the very strategies in this book we've been using and sharing these trade ideas with our members. We bought a bull call spread in the VIX based upon some of the strategies in this book. We've also bought downside protection in QQQs and other instruments, all based on strategies and timing and methodologies that we learned in this book. Very, very profitable, very good for helping me discover this ahead of time. Also, if you have any sort of medium to long-term portfolio that you're managing, maybe you have a 401k, which most likely is going to be long only biased. If you have a fair amount of stocks and you're looking to protect yourself in this recent downturn, if any of these types of situations, you should definitely be getting this book, because they'll give you tools and methods to help deal with these sharp sell-offs so that you don't lose as much money and you can potentially even make money from it. So with that being said, I hope you enjoyed this book review. If you'd like to see more book reviews, let us know in the comments below. I am a voracious reader. I read about a book every single week. I am reading tons of trading books right now that I'm just dying to share with y'all. On various types of strategies and methodologies and approaches to mindset, psychology, trading, options, everything. And so, I like sharing this knowledge with you so that you can use it and make money from it. So if you like this video, make sure to click that little button with the thumbs up there. Subscribe to our channel if you haven't already, and just let us know in the comments below. We really appreciate it. It helps us out with the YouTube algorithm. That tells YouTube that you are enjoying this video, you found value on it, and they will help us with our overall channel as a whole. So I look forward to your comments and questions. Good luck trading, and I'll see you in the next video.